Hi, it's David here with Futures Trading. I want to give you the rest of your information that the FOMC actually did. So we talked about that CPI this morning, the news that had happened, and just showed you the tools in relation to that information. I'm one that I do not care about news. I don't care about 9:30. It's going to behave the same way that it always behaved because it's universal. The approach that I'm teaching you is applicable in all cases. That's the point. That's the definition of it, and that's what happens. And I'm going to show it to you on the chart. Welcome to the channel. I want to go ahead and say that to you. Fate brought you here. I did not pay for any viewers, likes, or subscribers. I do not plaster my face all over the video. All the thumbnails are actually of the chart that we went over. I want to say that to you. So don't want to entice you to be a trader because I believe you can lose all of your money and frustrate everyone around you with this market. I really believe that. So unless you know how to do it, don't approach this. I'm going to tell you that right now. And my goal is to try to help you learn how to actually do it. Do take advantage of everything that's on the channel. Everything that you would need is here. Everything that's free is here. And you could do just fine with the free information. However, I did provide my tools to the public. I want to make sure that you understand everything that's on the channel is worth far more than $200. Far more than $200. It's invaluable, so it's priceless. What I'm telling you for free. The tools is just an additional opinion of me being on your chart, telling you that is a chance that would absolutely work. And we're going to take a look at that. Now, if you're new to the channel, most viewed videos here, there's a must watch list, pretty much an array of different information that I've covered. Price action reading. If you never read a chart before, I'll show you how to do it just using the candles. Universal threshold, how far it can pull back before it resumes. Here's the universal trend using price and price alone, not dealing with any structure breaks or anything like that. Universal price action method, 2 bars, bar and a half, because I'm going to show you how to read it in real time so you don't have to risk a lot of money. Universal chart scale, unless you blink for a long time, the market will turn directly in front of you so you don't have to look left. I tell you how to use your chart to know where it could potentially turn at. Really important information. I want you to know everything that I'm teaching on this channel. If you win, it's this. If you win, it's this. And if you win, it's this as well as this too. So if you're looking at your chart, no matter what your approach to markets is, if you've never traded, you'll definitely want to learn this. But it doesn't matter whether you're using order flow, support and resistance tool, moving average. I don't care what you're using. I can assure you all of this will be a part of that winning trade. It's like having a car. You can talk about the wheels. You can talk about the sunroof. You can talk about the muffler on the back, the bumper, or the front end of the car. But I guarantee you the engine is what makes that car. And so the universal approach is just that. There's my indicators. Again, I'm providing that to the public. So you guys don't have to be online trying to figure out what's the best no-touch approach. I don't want you to have to do that. I know a lot of people are doing that with that ICT stuff, trying to figure out which is the best block, whatever block, and what's the best fair value gap, all of these different things. But it's the engine that makes it go. So my tools are going to highlight to you what's the size of the engine. That's all. What's the size of it? It's still the universal approach. So you're going to need to know how to approach that. So don't try to purchase my tools or anybody's tools for that matter if you don't understand the universal concept of how to look at the markets. So let's get into some of that information. And again, thank you for stopping by. And it's going to be just like a recap of this information that I did this morning. We're going to touch on that FOMC and take a look at what that did. Now, I gave you this morning some information and we're going to cover it. But before doing so, here's all the indicators that you will absolutely obtain if you get the suite for $200. Now, because it's $200, it's a discounted price. It's a follow the plot process, no Q&A. So I'm not going to be doing any questions and answering about the code. I can't do that. I paid just $200, well, a little over $200 for the functionality of the price line here. I had to make it the aggression, but I wanted that functionality. I didn't know how to code it. So I had to pay someone over $200 just for this price line. And then I built the rest of my suite around, of course, all this other information that I know about markets, but yet principles. It's really important that you understand that the majority principle is important as well as a couple of others. This is the picture that I showed in the video earlier today. If you want to go back and take a look at that information, if you want to go back, that's this video here. I showed you this picture here before the CPI. It was at 7:15 in the morning. I knew these zones was there long before today. All right, just want to go ahead and tell you that. Up here at this price, that's at 625, and then the 25 here. Now I had to. We'll talk about that in just a moment. But I had to change my daily. It was on the default the instrument settings. I had to change it to the 24/7. So that's why the bars just look slightly different. But the prices are the same. I can assure you. We're going to look at the chart, so you'll absolutely know that the prices are the same. There's the zones. And this was at 539. This was at 539. But before 539, I want to show you what had actually happened. All right. So that's from this morning. And again, those are those prices. And of course, this is where they're at. But before they had gotten there, again, these are the prices that was up there. These was the price I just had to change. And you'll hear me say it in the video if you go back and watch it. I was changing my daily chart because I needed to switch it over. These zones, we're going to talk about these. These are the zones from yesterday. So I covered that in yesterday's video. We're going to take a look at that. So that's yesterday's video if you want to go back. Because again, this is about highlighting that suite. I want to make sure you're understanding what you're getting, what's the value here. Again, the free information is worth far more than 200 bucks. I can assure you of that. But I definitely want to show you what the tools are all about. And we're going to talk about what had happened before that last snapshot that I showed you. Yesterday, let's go back here real quick. Yesterday, the video, example one video, all right? I ended the video and price was, let me kind of unlock that. I'm going to unlock it. And let me slide this over just a hair. It was on this green bar. So price was on that green bar there when I ended the video. We had got started back here like about 10 o'clock. And that's that blue outline bar. So that's the blue outline bar with the climax. So that's the climax no touch bar color as well as the bar outline and the levels. So that's in blue. It got the blue bar on here on the bottom with the IR, which is the ignition run. This is important. This indicator is really, really important. The ignition run, you got the AR here, and that's the aggression reverse. But what turned the market? Because they had declined, they had dropped. Let's take a look back and see what had caused that turn. And of course, I highlighted this in that example one video. We went and took a look, and it was over here. It was the IR. So it was the ignition run. The ignition run is what got it started. And then you had a couple of them on the way up, and they had stayed up. Okay, they had stayed up from there until that decline at that 930, and that's what stopped that decline. So let's get back there really quickly here. And you can pause the video and look at all these things you want, but I just want to make sure you know what had stopped the market because I wasn't able to capture the 930. I was preoccupied a bit, but I managed to get here right at that 10 o'clock moment. And of course, they had already hit that zone, but there's that blue outline bar. There's the IR. And that's again, the ignition run. That's an important indicator. And you got your AR here with the blue outline bar, and they never came back. That was yesterday. They never came back to that zone. Never came back. So that's both of those zones that was on yesterday's bar. Now let's take a look at today. Let's take a look at today, and then we're gonna kind of bring it all together because at FOMC they did something real funny, just real funny, back and forth type stuff. All right, so let's this is where we were at. Okay, so when I ended the video today, this is where I ended the video. Kind of the same ordeal. Here's 932. So the 932, this is a 2-bar signal. The IR is a 3-bar signal. But again, you got to go for the distance of the 3 or the 2. Really simple stuff. But the IR is pretty much what you want to get going. Now, before that, let's talk about the CPI because I didn't record then. But I wanted to show you that, yeah, even before the news. Now, what captured all of this before it got started was, let me see here. Where did I put that zone? I started the zone. It was right. Okay, right here. I'm sorry. AR. So the AR and the note, the fair value gap. I got mines up here. The fair value gap with the level and the zone. The AR was right here. All right, so that was right there. They pulled down to it. Let me just throw a line in there on the back of the AR, but the level is the back of the zone. All right, so I'm gonna just put a line in there so you can kind of see that. And so they got into the zone. This is the first time they tagged it here. And then we came back with another blue bar. So the low of this bar, and this is the AR and the IR. So this is the ignition reverse. Okay, so the low of this is 262.75. The low of this one here is 263.50. All right, so right before that CPI news, they leaned over, and then bang. So you had the zone from that signal back here. All right, that's the AR, that's the aggression reverse. Okay, and then we had your AR and your IR showing up on this bar with the blue outline. So kind of just layered in information. Again, this is me telling you that the engine is a little bit bigger on this car. That's all. So it's still an engine, but it's just a little bit bigger. And of course, there's the push to the upside. All right. So and there's the AR and the IR collectively again. It came in again here, and then of course we ended the video here. And needless to say, they never got back down to that zone. All right, now the FOMC came in on this bar here. Well, 2 o'clock was here. Here's the, I guess, the reaction to it. And then, of course, you got that whipsaw. Now, off the top, let's do this. Off the top, I'm going to just kind of throw this here really quickly here. Let's just kind of put this here. And just grab all three of these, and then I'm going to just kind of project it forward. And we'll take a look at that. So let's do this. Project this forward just so you can see it. I want you to see what that did. All right, so we're going to project this forward. And again, the blue bars, this is a 2-bar signal with the blue outline, the red colors, 2-bar signal. Try to go for the distance of that. I want to make sure that you're able to see that as well. They kind of just drove up in there and just gave you a bunch of nasty business, knowing that they wasn't going to go down. That's the whole point. All right, so you had your level back here. They kind of swung into it a few times, but then got up there and then came back and kind of sweep that level. Now, when it comes to what was to the left, let's go ahead and take a look at that information there. All right, so we ended the video here. Okay, so we ended the video here, and I'll put a line on the bottom of that FOMC spike down. Okay, so let me just get the low of this. Low 48.50, low 48.50. So low here is 48.50. The low here, get this, make sure I get it right, 48.50. All right, so I want to make sure that you can see that. Matter of fact, let me open it up. I'm gonna open it up so you won't be confused at all. Low 48.50, and let me go over here. Now this is my fair value gap signal. This is the low 48.50. All right, and of course we had that supply and demand zone from the map. So the map, supply and demand zone with the fair value gap that I created, all of that just kind of fell in this area right here. And that the FOMC, they kind of hit that. All right, so they hit that, but again, they got trapped and kept coming in with those IRs from above. So we had 3 of them stacked in this area. And then, of course, they stayed beneath that fair value gap there. There's one here as well. That's the one with the bigger level. They stayed beneath that as well. And, of course, we had these fair value gaps here. Had one even down here. So when they pulled down, again, that's my version, all right? And then they pulled down in it again. And then, of course, you know, they pushed back up there, but then they came right back with the ignition run, the IR, and the AR, the aggression reverse. And then they kind of dropped down. All right, and so then they did a lot of back and forth, just a lot of back and forth, and then of course eventually here come the blue bars with the blue outline, and of course they leaned over, they managed to push through there. Now here's the thing that's interesting. This right here, they pulled directly up to the back of that zone and just dropped. Now I have you know, let me kind of see, can I grab that again for you? All right, so let me grab this. I have you know that let me lock this. As a matter of fact, let me lock it. That this is not random. All right, it's not random. 88.75. Let me see if I got that snapshot. No, I don't have it still. But they had pulled up near the back of the zone. I just forgot what the price is. I think it's 600.25. And here that high is 588.75. I think it's 600.25 from the snapshot. You can rewind the video or go back. But they had wicked out really bad and dropped down. They just never got back near that zone. Again, I showed you where the FOMC kind of stopped it. They had wicked out really bad and even came, I believe they even came back beneath the FOMC, but I know they never got back to that zone from this morning. So they never touched that zone. Even though they came, and I knew they can come back and get this. This isn't it. All right. That's not it. I know that's not it. They can come back under that. I know that. So they managed to come right back down, to say the least. They came right back down, but before 5 o'clock, they tried to get back up there. And the goal is, and it still is, I believe they can get it done. That's why I'm going to give you this video now. They're going to close above here, I suspect, unless, I don't know, maybe they decide to turn it back around and not want to close above the zone. But I put this zone here before we even touched it. Before we even touched it, I knew that this was the plan, to try to get here and close outside the zone. I knew that. And I'm telling you that this is important as well. This is not random. Everything that I do in markets is not random. It's not random, I can assure you. There's an indicator included inside of the suite that will tell you that this price was important today. It's the map. The DTT map would tell you that this price is important, that it was important today. Very significant. All right. So we got this information up here, and I said, should price be able to and can close above here next Friday or by July 1st. So we want to see if they can get that done. We want to see if they can get up above here next week. I'm not going to come back and cover it. So I want you to go ahead and just take full advantage of it. Just take full advantage of it. See if they can close above here. Again, that's 2025 by next Friday. Or possibly, because they may close next week above here. Want to see if they can hold it until July 1st. So see if they can hold above this price by July 1st. I will not come back and cover it. I want to go ahead and just kind of give you what you need, because I think at this point it's pretty evident, what's possible with the tools that I'm trying to give you guys for $200. And here's that fair value gap after they blew that low. And again, I'm indifferent about that young man's his information. I'm indifferent about it. But I have that I made a version of it because you guys are into that. So the IRs are on this bottom here when they tried to move back up. And of course, this is where they're at currently. So if you would like, only if you would like, you can have all of this information, because that's all it is. I don't want you to, of course, waste your time trying to figure out, which no touch is the best setup. I don't want you to have to do that. I made the tools so you don't have to. All right. Again, it's me offering you yet some more understanding, years of experience on your chart. So if you want a professional's opinion on your chart to help you trade these markets, I strongly suggest take full advantage of this information. I've already ran a company online, YouTube, and all of that stuff. Took it offline. I wanted to retire. I don't want to be in the space. But I do want to give back. I want to help people. I want to make sure that you guys are not falling victim to the market. I don't want that for you. It shouldn't be that way. And there's a lot of people that's confusing people. They're confusing trading. And I don't want to see that happen in this space. I don't like what it has become. Didn't like it then, and I definitely don't like it now. So this is my way of just trying to be a part of the solution. So if you want to, the suite is available to you. But I suggest strongly, before even trying to buy the suite, what I would suggest to you strongly, take a moment and learn each one of these universal concepts. Just learn them. They're right here. They're really simple. As a matter of fact, I believe I went over all four in this video and this one. Went over it within minutes. Try to cover it so you can cut your learning curve. You don't have to watch all of this content for hours. But try not to proceed with, trying to purchase the suite until you watch at least 2 of these videos, at least. So that way you can learn all the concepts. And again, I covered all 4 of them in minutes. So again, thank you so much for stopping by the channel, and I wish you all the best with your trading. Take care.